Welcome to another video with Invest with the Doctor. My name is Dr. Haider. I am an emergency medicine doctor by day and an investor and a trader by night. Mostly an investor by night and a doctor by day. In these videos, I talk about the various stocks and investments people can do. I do my own research and I present you my research, and then you can make your own decisions of whether you should be investing in what I am investing in. These are my thoughts only, my own research that I'm showing you. The decision lies on you on whether you want to also invest in what I think is useful. In my previous videos, I had been talking about different stocks. But the stock market, like I mentioned in my last video, has been tumbling, and it's got to do a lot with the geopolitics and that is happening all over the world, which has caused the price of gold to rise because gold rises in unpredictable times. So my last video was about the reasons for the gold prices to rise, and they have been rising quite a bit as compared to the traditional stocks in the S&P 500. So I think at the moment I think it makes more sense to invest in gold and gold stocks. My last video was only about gold and I was only talking about investing in gold. Let me show you this is the gold chart itself. As you can see, these are daily Heikin-Ashi candles, or just daily candles which are showing you the trend of how the stock has been moving. And as you can see that the price has been just moving higher. Okay, so there was a basing pattern for the stock, and then the stock just started skyrocketing higher. The price for the gold at the moment is around 3,236 at the time of making this video. As like I said, look at the way the price has been skyrocketing upwards. These are daily candles, so you can see that the price was moving up like this, and then it's just skyrocketed upwards with the geopolitical events. Then I also showed you how you could again in my last video I presented how you could invest in gold. So you could I either buy gold bullion from the market, or gold coins. You can buy them from the Royal Mint in UK, or Bullion by Post in UK, or Pure Gold Company, which are places where you can buy the gold itself, or you could buy the gold ETFs, which I mentioned in my last one. So here is one of them, which is called iShare Physical Gold. SGLN is the ticker for it. SGLN. So you could just buy SGLN in your brokerage firm as an ETF. So this would be like Trading 212, or any other broker that you're using here in the UK, and you can just directly invest in gold itself. Then you've got another ETF called Wisdom Tree Gold, and the ticker for it is GLDW. These ones I mentioned in my last video. Again, they pretty much track the price of gold, and as you can see, it's been moving upwards like this, daily candles, and you can see how strong this trend has been. And the last one I mentioned in my last one was this one here. This is iShare Gold Trust, IAU, where you can directly invest into gold. Again, you can see pretty similar, tracking the price of gold, which is going one way. So this is why the this is why gold has been skyrocketing upwards. Now, I mean, the prices of gold have been going up, like I said, due to geopolitical events, and those events are sort of changing day by day, causing a lot of volatility. So in the coming weeks and months, I predict that the price of gold is only going to go one way, and you probably know which way that is. My advice is to remain calm and avoid knee-jerk reactions. This has been an event driven market, meaning that asset prices are essentially in a day-to-day cycle of sort of assessing economic policy announcements, trade negotiations, deals, or de-escalations. There is not a secret set of tools investors can use to navigate this type of market, in my view. This is a time. This is time to avoid guesswork and to keep focus on strong companies in a diversified, long-term focused portfolio. In other words, tune out the daily noise, and there's going to be a lot of daily noise in the coming few days, as been happening since the start of this year. Going forwards from here, I urge investors to avoid trying to guess the next move on trade or any other economic policy. Instead, focus on the big picture. And at the moment, the picture is gold. Or mostly gold, I would say. In an event-driven market, one of the biggest risks an investor can take is overreacting to a news story. We've already seen that the US president has U-turned away from the most punitive of tariff measures on day one of their implementation. So it does not make sense to anchor your sentiment or investment decisions to headlines, and especially not to the worst case scenarios where you feel everything is going to explode. Many making investment decisions based on what positive or negative surprise might come next is not only futile, but it can also do real damage to your long-term returns and your portfolio. Going forward, I expect market volatility to persist. After all, there are still 10% universal tariffs in place, and an ongoing economic standoff between the US and China. And China doesn't seem to be backing down at all. More twists and turns are likely, which makes a disciplined, diversified approach the most effective way to navigate your way through it. That's why now is the time to step back and look at the bigger picture. The sharp swings we've seen in response to trade headlines are a reminder that the timing the market or reacting emotionally to every twist in policy is not a strategy, it's a risk. With volatility showing no signs of slowing and a recession risk still on the horizon, now is the time to prepare, not predict. Which is why I'm making this video. Gold prices have been going higher, and this is a fact. Gold is in a bull run, and this is a fact as well. So how can we benefit from this? This is what I'm going to talk about in this video. Investing in gold in this year can only raise the value of your portfolio. See where the price is rising and move with it. Okay, general stocks may not be such a good idea, but there are individual stocks that will go higher, and I will talk about them in my coming few videos. But at the moment, this video is more focused on traditional gold stocks. So the last one was just about gold itself, and today I'm talking about gold stocks. So when the gold prices rise, gold stocks generally go up too, but the impact depends on the type of gold stock. Here's how it typically plays out. Number one, you've got the producers like Newmont and Barrick. They directly benefit from higher gold prices because they sell gold. Their profit margins expand, costs stay relatively stable, but revenue increases. Stock prices often rise more than the gold price itself, and this is called leverage to gold. Example is if gold rises 10%, a producer's profit might jump to 20 to 30%, leading to a bigger stock gain. Number two, junior miners or explorers. These are speculative. They're not selling gold yet. Rising gold prices improve the value of their potential deposits. Investors may rush in hoping for discoveries to become profitable. These stocks can skyrocket but also fall hard if sentiment shifts. Number three, royalty and streaming companies like Franco-Nevada, ticker symbol is FNV. They get a percentage of gold production or revenue from other miners. They benefit from price rises without mining risks. So stable, lower risk, usually less upside than producer but less downside too. Key factors that affect gold stock performance even during a gold rally. Mining costs. So if costs are rising, fuel, labor, etc., margins may not expand. Political geographic risk. Mines in unstable countries might face disruptions. Debt and management quality. Poor managed poorly managed companies might not capitalize on rising prices. Investor sentiment, sometimes gold rises due to fear, that is inflation, war, etc., and that fear also drives up gold stocks more aggressively. So how some gold stocks move during how did some sort of gold stock move during recent gold price surge, that is from 2020 to 2022. Gold price trends in 20 to 22. Now the reason I'm mentioning 20 to 22 is this is where the gold prices rose quite a bit, and you can see what happened to the gold stocks when the gold price was rising. So this is something we can see in the past and project in the future. So this is what might happen from here. So gold price in 2020, gold price surged due to COVID-19 pandemic, starting the year at approximately 1,589 per ounce and reaching a high of 2,073 per ounce in August, before ending the year at $1,896 per ounce. 2021 price fluctuated, beginning at 1,846 per ounce and closing the year near 1,828 per ounce, reflecting a modest decline influenced by economic recovery and vaccine rollout. In 2022, gold reached a record high of 2,200 per ounce, driven by factors such as central bank purchases and geopolitical tensions. Gold mining stock performance. Gold mining stocks often exhibit leveraged responses to gold price movements. So here is how major players performed. Newmont in 2020 sort of rose by 37.8%, benefiting from the rising gold price. Barrick Gold achieved 22.5% in 2020, reflecting strong operational performance amid favorable gold prices. Franco-Nevada, which is a leading royalty and streaming company, saw a 21.3% rise. A company called Kinross Gold had a remarkable 54.9% return in 2020. However, not all gold mining companies are successful. So there was one called Resolute Mining, which faced minus 36% performance in 2020, impacted by political instability in Mali and operational disruptions. Santa Barbara experienced a minus 13.2 return in 2020, affected by Australia's economic challenges during the pandemic. So gold prices have experienced a significant surge here in 2025. So right now the price the gold price is hovering around 3,200 per ounce as of April 12th, marking a 23% increase since the beginning of the year. This rally has been driven by factors such as central bank purchases and, of course, as you know, geopolitical uncertainties. In response, gold mining stocks have outperformed the metal itself. Okay. For instance, Newmont Corporation, ticker symbol is NEM, stock has risen nearly 50% year to date, surpassing gold's 23% price increase. Similarly, other major miners like Barrick Gold, Agnico Eagle Mines have seen their shares climb by 21% and 35% respectively. And exchange traded funds focused on gold mining have also benefited. The VanEck Gold Miners ETF, GDX, and the Junior Gold Miner ETF, GDXJ, have both surged by 19%, indicating renewed investor interest in the sector. Analysts suggest that sustained high gold prices could continue to drive earnings growth for gold mining companies. UBS, for example, has upgraded Newmont's stock rating, citing strong leverage to gold and expected cash returns. So gold prices in 2025, as of April 12, 2025, gold is trading around 3,200 per ounce, which is a massive 23% increase year to date. The rally, I already told you what's been happening with the rally and why it's going up. I also think that people are rushing to safe haven demand for and that's been growing. So year to date, Newmont is up 50%. Barrick Gold is up 21%. Agnico Eagle Mines 35%. And that's got to do with the strong North American exposure, which has helped the price to go up. Gold stock ETFs, GDX is up 19% this year, and junior gold miner GDXJ is up also 19% this year. So analysts say at the moment that gold stocks are outperforming gold itself, which you have also seen. Operational leverage, mining costs don't rise as fast as gold prices. Investor sentiment, big money is rotating into commodity equities, so commodity stocks basically. Dividend yields improvements, miners return more capital to shareholders. So again, this is a small chart which is showing you exactly what I've been talking about lately, and the price rises. So you can see each of these companies. You can pause the video if you want, and you can look at the prices. So Newmont, Barrick, Agnico Eagles, and like I mentioned, year-to-date performance 47%, 33%, 50%, and the gold mining ETFs, which is the VanEck Gold Miners ETF and VanEck Junior Gold Miners, are up 46% and 43% respectively. So gold prices have risen over 20% year to date. Okay, so the year to date gold prices are up 20%, but as you can see, these companies are doing a lot better. Again, Newmont, the price has risen because of strong leverage to the gold price itself. Barrick Gold is a well-managed, lower geopolitical risk company. Agnico Eagle Mines are high-grade reserves in safe jurisdictions. Okay, but that doesn't mean that things won't go wrong. It's just that they are considered safe or safer. Then you've got the gold miners, which are the GDX and the GDXJ. So I think when you're investing in gold, it might make also sense to invest in these gold ETFs, which are at the moment doing good. So having talked quite a bit about these companies and the stock itself, what does this mean for us? Gold is rising, but gold stocks are rising more thanks to the operational leverage. When gold goes up, miner profits multiply faster. If you want to invest in ETFs, GDX and GDXJ might be a great way to play the gold trend without picking individual stocks. Best performing picks so far: Agnico Eagles has got rock solid foundation and fundamentals with a 50% year-to-date rise. Newmont is a cash machine with a lot of room to run. So investing strategies or options are depending on your goal. You can sort of go steady exposure to gold, which is buying the gold itself or gold ETFs like GLD and IAU, and leverage the rally. So you can leverage the rally with large cap miners, Newmont and Agnico Eagles, or you can go for high growth potentials like junior miners or GDX ETFs, or a low maintenance choice like GDX ETF, which is a diversified miner. Here is just a little bit of same info for you to have a brief summary of what I've been talking about. So again, you can pause this, look at the companies that I'm talking about. Now let me show you these companies one by one. So companies and stocks one by one, so you can have a bit of an idea of how the price is doing. Let's start with the bottom. So we've got GDXJ. So this is GDXJ. At the time of making this video, the price for GDXJ is around $61, and you can see that it's coming out of this base that you can see, and is going upwards. So the price is going upwards, and this is GDXJ, as you can see. Now the other one that I talked was the GDX, which is VanEck Gold ETF. Let me show you GDX. Sorry. Sorry. So let me show you GDX, which is this one here. Click on it. Okay. So this is the stock for GDX. This is the VanEck gold miner, and as you can see, the price is for GDX is $49. So again, you see it's coming out of the base, and the price is moving upwards. Then you've got so we've talked about the GDXJ, we've talked about GDX. Then you've got Barrick Gold. This is Barrick Gold itself. The price for Barrick Gold at the moment is $20.59. The ticker symbol is GOLD, as in gold, but this is a stock itself. Again, it's coming out of this base, and you can see how it's skyrocketing upwards. So this was Barrick Gold. Then I'm going to show you Agnico Eagle Mines. So Agnico Eagle Mines is here. The ticker symbol for Agnico Eagle Mines is AEM, and also same thing. Do you notice the same thing? So basing pattern, which is here, and now the price is moving out of this basing pattern. So this is Agnico Eagle Mines, ticker symbol is AEM, and the price is 117 US dollars. Then you've got Newmont. Newmont is the biggest gold miner out of them, and these smaller ones, I mean, these gold miners are all in the GDX ETF. So you can just buy the ETF GDX if you don't want to invest in individual gold stocks. So the price for Newmont, ticker symbol NEM, is at the moment around 54 US dollars. Again, same thing, basing pattern, and the price is moving out of this basing pattern and moving upwards. So you can see all of these stocks. If you look at any other stocks like in S&P 500, you won't see the same kind of pattern. And this is why I mentioned the fact that gold is in a bull run. So like I said, my previous video was about gold itself and how to invest in gold and which gold ETFs to buy, and this video has been about gold stocks or companies that also invest in gold mining companies, gold royalty companies, and gold ETFs. So having said all of this, I've shown you a chart, I've shown you these companies, and I've shown you the prices when the gold stock goes up. Okay, so you can make your own decision after having looked at these companies, and I hope that you found this useful. I hope the research that I've done made sense to you, and I think you would benefit from investing in these companies. I know I will, and I think with the way things are and how unpredictable they are, I think for the rest of 2025 it would make sense to at least have some investment in gold ETFs and in gold mining stocks or gold stocks. So if you like this video, please like and subscribe to the channel. and please share around so other people can sort of benefit from these videos. This is just free information and my research that I do in my spare time. And as always, thanks for watching.